Hey, what's going on, guys? Casey Dimon here, TaxSaleAcademy.com. Thank you so much for joining me on today's live stream Q&A on today, which is December the 20th. All right, guys, if you haven't joined me on live streams yet, usually what I do is I got a whole bunch of questions that I get throughout the week, and if they're good questions, I kind of save them, and then I'll go ahead and we'll talk about them on the live stream. So if I mention your name and mention your question, but I've already answered you, just know it's a good question. I want everybody else to hear the answer as well. And then, of course, if you have any questions at any time, go ahead and throw those into the chat box, and we will get going. But before I start answering questions, obviously, guys, if you want more information, more detailed stuff, head on over to TaxSaleAcademy.com. You can also follow our podcast. If you listen to podcasts, listen to us on the go at TaxSalePodcast.com. I see a question popping up, and I've got a few pre-select ones. Let's see. Roy Taylor, is Auction.com a good source? Is it better to use the newspaper or the county website to find listings? So Auction.com is it can be helpful, like bank foreclosures and stuff like that. You won't find too many tax foreclosures on there, but oftentimes what will happen is the bank will advertise on there, or they'll have representatives advertise on there. It's controlled by private parties putting the stuff on there. It's not the government doing it. So if you want go directly to the source to get all the listings and everything else, go directly to the county's website and find out as much as you can from them. It's a good place to get like pictures and stuff like that. It can really kind of give you a head start for your research, but ultimately you want to go straight to the county. So hopefully that helped. Let's see, I've got Ronnie Newman a few days ago asked this question. He said he was researching parcels in a county in Arizona. I found a list that had 183 pages of OTCs. That is a lot. Are those usually red flags, or is it that nobody's buying because the area is so rural? I responded to him personally, but to everybody else, yes, those are definitely red flags, and it could be because it's so rural. A lot of times what happens, especially in very, very rural areas, and I see this a lot in Arizona, I think it's just desert land that's, in very, very small parcels that nobody's buying and nobody's paying the taxes on. If you invest there, you can buy properties very, very cheap, but there's zero demand and there's a huge amount of supply, which is just not a good combination for us as investors. So yeah, you might want to steer clear of those areas. If you do see a lot of OTC properties, especially in one subdivision, the legal description is going to have the subdivision name. If you see that same subdivision name over and over and over again, it's going to be a clue, guys, that you might not want to invest there. Might be something wrong with it. It might be a crazy HOA fees. I see that a lot. I see subdivisions that have like building moratoriums, so you buy a lot there, you can't use it. So if you see that same subdivision over and over and over, that's going to be a red flag. And then obviously 183 pages of OTC properties is probably going to be a red flag as well. I'm not saying that you can't make money there, it just might be a little difficult because apparently there's a lot of supply and zero demand there. R Blunt 0721, is 5K enough to get started? 5 grand, is that enough to get started? Yeah, absolutely. And I've got some videos where I got some incredibly cheap properties. I'm not saying you're able to get them that cheap, but $5,000 can definitely get you started. A lot of it depends on the area that you're in too. If you're in a very, very expensive area when it comes to taxes, opening bid might be $5,000, $10,000 for every property. But I've also been to auctions before where opening bids are like $100. So just kind of depends on your area. Basically, the smaller the budget, the more patient you need to be because the less selection you're going to have for obvious reasons. But 5 grand should definitely be enough, especially if you're willing to travel, maybe if your area is expensive or something like that. But check out the prices, see what they're going for, see what the open bids are, in your specific area. Let me take a sip of water, guys. Drew says, do you think I should wait for the market go down? I think he's trying to ask you, do you think if I should wait for the market to go down to get started? You can. The short answer is no, I don't think you should, because you can never catch the market, you never play it. There's always going to be opportunity. I actually let me see if I can find my calendar here. Yeah, okay, so the short answer is no. The long answer is going to be on December the 26th. I've got a video scheduled right now on that exact topic, talking about the market and timing the market and all that good stuff. So check on December 26th, and we go into detail as far as the market timing and stuff goes. Let's see, M. Bates, how do you know if a seller accepts credit cards? it'll be listed. It's going to be probably on the bid sheet itself, on the auction listing, something like that. You might say cashier's checks, personal checks, credit cards, Visa, MasterCard, whatever it is. If it's not listed, you can pretty much guarantee they won't accept them. It never hurts to call or send an email and see if they'll respond to you, and kind of learn that way if they accept them or not. And then obviously, if you have to use credit cards, but they don't accept them, you can always consider the cash advance option. It's crazy high interest rates, but if you're confident in what you're doing, then it might be helpful for you. I got a few more. I'm going back and forth with the questions that I got ahead of time and the live questions. I saw a few pop in. Let's see. Craig Miller, what's the difference between liens and deeds? When should you buy each one? Which one is easiest? I've got a bunch of videos on this. You can search lien versus deed, tax lien, tax deed on my channel here. I've got a bunch of videos on this. In short, a tax lien, you're buying a lien against the property. You're going to earn interest on your money. The deed, you're actually buying a tax foreclosed property. So a lien, you're buying a lien. Tax deed, you're buying a property. When should you buy each one? It just depends on your investment objectives. So it depends on really what you're trying to get out of your money when you put it in, how much effort, that kind of stuff. Which one's easiest? Again, everything is they're all backed by the underlying asset, which is that real estate. So you have to understand and do your diligence on that real estate, know exactly what you're buying. When it comes to the end result, your lien is going to earn interest most of the time, so you'll get that interest back. And then the deed, you actually have to sell that property. So a lien is less work on the back end, but you're going to make less. A deed is more work on the back end, you're going to make more, typically speaking. Let's see, Mr. Jeff Trader, what percent of the properties do you sell with quiet titles versus tax deed? And how do you market your properties without quiet title? Do you include it in the listing or mention it after a buyer inquires? Great question. So basically, as far as percentage, I don't know, I would say 50-50 maybe, somewhere around that ballpark. Actually, I probably sell more without a quieted title than I do with a quieted title. And these are mainly going to be the low value stuff. You're talking a lot for $1,000, $1,500, $2,000, $3,000. The stuff where you're doing like more paperwork than anything else. And the reason is, it's just cost prohibitive to go and to pay a quiet title suit to get that stuff done. So I sell it as is. I say, listen, this is a piece of property and it was purchased from the county as a tax foreclosure. I'm selling it to you as is. I put it in the listing itself. You will get a quick claim deed. If you want to cure the title after that fact, get title insurance, that kind of stuff, it's completely on you. But that's all I'm going to do. Now, this has to be for the lower value stuff. For the higher value stuff, the stuff that I'm investing some money in, just about every single one of them, I would say over, I don't know, $8,000-$10,000 is going to have a quieted title, because that's going to allow me to get the most money back out of that property. It's just tough to sell a piece of property even for as low as $10,000 with a clouded title, because people hear clouded title, they just run. But $1,000, $1,500, you can usually sell them pretty quickly. And I think I'm answered that. And I do, yes, I include it in the listing. If I didn't quite the title, I would say as is. And I bought it from a tax foreclosure. Mention it after buyer inquires. And then sometimes what I'll do is I'll just make reference to it after the after we're kind of working back and forth, maybe negotiating that kind of stuff. And yeah, by the way, it's going to be a quick claim deed, and just to kind of double mention it. So Dodger 07. What's the best way to build your buyers list so that you can have buyers lined up prior to buying the deed? Good question. It's a little bit tough. If you don't have anything at all to advertise, it's a little bit tough. And the reason is, what I usually tell a lot of people to do is get that first property under your belt. Maybe it's a lot. Maybe it's hopefully one property of whatever you want to sell more of moving forward. Get that one property under your belt and just advertise the heck out of it. Just advertise it nonstop, more and more and more and more, and put as much as you can behind it, and then start building your buyers list that way. As far as before you actually buy a piece of property, it's a little bit tough. I mean, obviously you can, put generic ads on like Craigslist and stuff like that, like contact me for vacant land in this area, that kind of stuff. You don't want to mislead anybody, of course. You got to make sure, you're not violating any advertising laws or regs or anything like that. by advertising property you don't own or you don't actually have control of, and you can't represent yourself also as a real estate agent or broker. So be careful that not to give off the impression that you're brokering somebody else's property. So it's tough. It's very, very tough. You walk a very fine line trying to build your buyers list before you have your property. But once you have that one property, just advertise it like crazy. Just go gung-ho and try to get that list built up. Yoshika, hey, do you ever do seller financing on any of your properties? Sometimes I do, sometimes I don't. I have in the past. I prefer not to, just because, especially the lower dollar volume, the lower value stuff, it's hard. By the time you try to foreclose and when you're doing contract for deed, all this good stuff, it's difficult. And then if you have a home, it can be very, very difficult with Dodd-Frank nowadays, because you have to verify their income and their credit, verify basically their ability to pay for the house if they're going to use it as a primary residence. So it's become difficult since Dodd-Frank for people selling homes. So it's difficult now. I try to get in, get out, get my money, move on. But if I have to, if I have a property that's stubborn that won't sell on me and I have to, it's definitely something I've done in the past. And something that I'll probably at some point, start doing in the future. But it can be difficult. See, I've got another couple of questions over here. Let's see, what's there? Okay, we've got Craig, Dirt Alert 88. What would you say would be the best course of action if you're still in saving up? If you're still okay, so it sounds like you don't have enough money to start investing right now. Just continue doing what you're doing. Continue consuming content. Look at the county websites. Read the county rules. Go through all the different auction lists. Go research, practice. I've got lots and lots of videos here. Buy my book if you have $4.97. If you do whatever you can to learn everything you can as you save up. That way, when you do have enough money to get started, you'll be ready to jump on the first opportunity. Let's see, back to the live questions. I should keep it strong. Do you only invest, or have you brought your first house this way in auction? As far as my residence, maybe the one I'm living in. Okay, sorry, my screen's moved around on me a little bit. Okay, so basically, yes, I invest nonstop, and the houses that I live in, those are pretty much bought on secondary markets, all that good stuff. Most of the stuff that I invest in, I invest in lots and lots and lots of vacant land, lots of lots of acreage, that kind of stuff. I'm very, very heavy on that. I would say a large percentage of what I buy is the vacant stuff. So as far as homes and stuff, I do a lot of homes, but it has to be your opportunity, that kind of stuff. Especially do a lot of out of area investing and stuff, and it's difficult to remodel a house when you have to get on the airplane and fly up there and try to manage it from hundreds of miles away. So it's a little bit difficult. Jake says, straight and to the point. Jake says, best state, ? This is a question that I really can't answer. And I get this question from time to time. Everybody wants that easy button. Send me to one straight. This is where I want to start investing in. And I understand that. I get that. But at the same time, it depends. Do you want a lien? Do you want a deed? What's your budget? What's your travel availability? Can you attend auctions? Can you leave your job? Can you take time off your current job? And if you do take time off your current job, how much money will that cost you? Not making wages, so how much money do you need to make, as a tax law investor, right? There's just way too many factors when it comes down to it to figure out how, what works best for you. Your investment objectives and mine are all different. So my opinion is to look at other states, look at your state, other states, figure out tax lien, tax deed. Go to taxlawacademy.com /state-guide. There's a link down below. Click on that. It'll breaks down all the different states. Maybe you want liens, maybe you want deeds. Click on whatever state you want, and then from there start reviewing past auction results, see what the auctions hold moving forward in the future, and that kind of stuff. And it'll really kind of help dial you in to the best state that works for you. I actually did a workshop on this for the Academy members last week and the week before, and that's kind of the summary. It's a very, very brief summary, but that's kind of the summary of it. Find the best state that works for you and kind of dig into it. All right, Super Mike 8892. Do you do any buying before the tax deed auction? What's the benefit of this? Avoid competition ? Yes. So basically what he's saying, do you go and sneak in there and buy that property directly from the owner prior to the tax deed auction, and that way you won't have to bid against anybody at the tax deed auction. I've tried this in the past, done it a few times, but number one, you're dealing with a private owner that is it can be very, very emotional. They're about to lose their property. They might not even understand that they're going to lose their property. They might not want to accept it. They might be the type of person that doesn't believe the government should charge tax on anything, that kind of stuff. So like it can be very, very it can be a fragile situation. Number two, when you buy that, those liens, if they have a mortgage, if they have any other liens on that property, they will still exist. They become your responsibility. You also have to have a title company insure it for you and all that good stuff. Now, it is good because at that point, the title will not have been clouded. So, it'll save a bunch of money there on the back end. It allows you to insure it and stuff, but you're basically buying it. It's a private party transaction is all it is at that point. You're buying somebody's property before it gets foreclosed on. That's really all there is to it. Yeah, there's benefit to it. You're going to avoid competition and stuff like that, but you're dealing with an owner. You have to factor in all the other encumbrances, and that could really push your, your price through the roof. So there's benefits to it for sure. But a lot of times you're going to be swimming upstream in order to get those benefits. It's a lot of effort for sure. Now, 7, I've heard of investors approaching owner having them quick claim property prior to auction. In this scenario, I believe liens don't get extended. Yeah, I actually think that's kind of the question that I was answering with Super Mike. So yeah, so if you buy that property prior to auction and they just quit claim deed it to you, you give them the taxes plus $1,000 or whatever you basically you redeem it for them, pull it off the tax auction list, give them some money, and they're good. Now the title should be cleared. If you use a quit claim deed, it should be cleared if it was cleared up to that point. Now, what you don't know about is maybe there were 5 owners and one of the owners died, and that person didn't have probate, and now you're stuck in a legal mess, and your title is still clouded, even though it didn't go through tax foreclosure. Or maybe you have a husband and wife, they both won't sign it, or there's all sorts of other issues. If you buy it prior to the auction, I really suggest that you go through, just work as a standard transaction like you're buying through a realtor, go through a title company, get title insurance, all that good stuff to make sure everything's taken care of, and that way you don't have to worry about it. Because the last thing you want to do is try to sneak in there, give them the taxes plus $1,000 or $10,000 or whatever the number is, get a quit claim deed, and when you go to sell it, realize, wow, there are a lot of title issues on this property that I didn't know about. And it could very well end up costing you more than had you bought it from a tax sale auction in the first place and then just acquired the title after the fact. So it can, there's good and there's bad. But if you buy it before auction, I really, really suggest that you use a warranty deed, title insurance, all that good stuff. Treat it as a private party transaction. Hopefully that answered your question. Let's see, Mr. Jeff Trader, how early in the cycle do you insure a home purchase at auction, especially if there's a redemption period of 3 months? Or even a year? Great question. And this really depends on the state. There's some states where during that redemption period, you don't have 0 rights, and it's going to be very, very difficult to insure that property. There's other states where you have the responsibility to maintain that property. So it depends on your state statute and exactly how it's written. Once that property becomes my responsibility, or truthfully, once I put out a lot of cash for that property, I'm calling my insurance agent. I'm saying, this is the property, here's the situation, and they'll usually write a policy for you. You're gonna maybe it'll be a vacant house policy if there's nobody living in there. But they'll usually work something out. I mean, obviously, if you pay enough money, they're gonna insure it for you. This is the way I kind of have come to look at it over the years. But yeah, just depending on your state too. So as soon as you get that property, call your insurance agent, say, this is the deal, there's 3 months redemption or whatever it is, or a year. It's my responsibility though, I have to maintain it, I have to be responsible for it. I want insurance. And they'll give you insurance. But I usually do it right away. As soon as I write that check, I'll do it. Of course, depending on the size of the check, if I'm buying a house for $2,000 and the insurance policy is going to cost me $1,000, I probably won't. But if I'm putting $30,000, $40,000, $50,000 there, that $1,000 or $500 or $300, whatever the rate is in that area, is going to be money well spent. Let's see. Moving on, I do have a note right here, guys. I wanted to remind you guys, if you do listen to podcasts, be sure to download our podcast, taxsalepodcast.com. Again, that's taxsalepodcast.com. Just started posting stuff over there, I don't know, probably 5, 6, 7 months ago. So again, taxsalepodcast.com if you listen to podcasts. All right, back to the questions. Stellar Investment Group says, in your opinion, what's better, a suit to quiet title or the certification? And he's talking about the tax foreclosure certification. So, Suit to quiet title is a judicial process. Judge signs off on it. The title is good. Once that judge signs off on it, it is perfectly clear to get any title company. It's great, right? The tax foreclosure certification is a little bit different, where they're going back, looking at the foreclosure record, certifying that everything was done to state statute, and then that property will be insurable between that company, basically based on their word, on their bond, on their insurance policy. And then if there's ever an issue, it's like First American, if they insure it, if there's ever an issue, they go back to that tax foreclosure certification company, and then they say, hey, this is the issue, we're coming back on your bond, on your insurance, okay? That's basically how it works. So again, with the suit to quiet title, the property is good, get insurance. With the tax foreclosure certification, you still get insurance, and it's still good, but you basically are going off their bond, that kind of stuff, and it doesn't really matter at the end of the day for you. Tax foreclosure certification is going to be faster because you're not waiting on attorneys, judges, court systems, dockets, all that good stuff. But there is a chance too that they might not be able to certify it, and you will have to go through a suit to quiet title anyhow. So kind of compare, how fast you need to get in and out of the property. What are the attorneys in your area charging for that suit to quiet title? Those kind of things. Yoshika said, do you do your own quitclaim deeds? Yes, I do. I do my own. I've been doing them for a decade now, though, so I've got a lot of experience. I've done them in a number of states. What I always recommend, especially if you're just beginning, is maybe get an attorney to prepare your first deed in one particular state, and then kind of model your deed after theirs. And then basically, I'm not telling you to prepare your own stuff if you're not comfortable, or if you don't want to, or don't act as an attorney or anything like that. Obviously, it needs to be legal. So check your state laws, make sure you can do it yourself, but you can in just about every state that I've ever invested in. So I do my own, but I wouldn't, just go gung-ho right off the bat. If you do decide to do your own, the best way is to have an attorney do one deed first and then kind of model after that one. So, and that might cost you $250, $300 to prepare a quitclaim deed. And it's going to seem like a lot of money at the very start, but you'll use that over and over and over again. Let's see. Deacon says, what's the redemption time in Texas? So all the redemption times, all the good stuff, all that kind of stuff on the states, on the redemption times, the tax liens, tax deeds, there's a link down below, but taxlawacademy.com/state-guide is going to be a great resource for you guys. Texas, let's see. Texas is going to be 6 months. Homestead properties, I believe it's 24 months. And then you get a 25 to 50% penalty if memory serves me right. I invest in a lot of states and they all kind of run together for me. But taxlawacademy.com/state-guide has all the details and stuff for you. Let's see. You got about 5 or 6 more questions that I've gotten over the past couple of weeks. Light Night MC. What kind of deed is a commissioner's deed? Is that like a tax deed? Yes, absolutely. It might be used a little bit differently, but typically it's probably, if it's from a tax foreclosure auction, they give you a commissioner's deed, it's going to be like a tax deed. Some counties or some states will call them tax deeds. Some will call them commissioner's deeds. Some will call them, some will just use a straight quitclaim deed from the county to you. They call them all different stuff, but basically they're all the same. The county is granting whatever interest they have in the property, either that they own to you, depending on the state, or that has been acquired through the tax foreclosure process to you. It's essentially a quitclaim deed. All of them are. It's a quitclaim deed as a result of the tax foreclosure process. That's what they basically are in a nutshell. Courtney to the O, is this something that can be done part-time, or do you have to do it full-time? Yeah, great question, Courtney. You can do it part-time. I've got a lot of people that do it part-time. A lot of people do it in the evenings. They can do it on the weekends. You can even do proxy bids. You can do all, if you work 50 hours a week, that's cool. You can still spend a few hours every evening and, start investing and that kind of stuff. So that's about it. It's very easy to do part-time. If you want to do it full-time, you can obviously do it full-time as well. And there's a lot of people that do that as well. So let's see, ET's questions next. I came across an auction the other day, and it required a mail-in bid with a check. It seemed weird. Yeah, sometimes they will do that. Basically it's a sealed bid tax sale auction. And what will happen is you'll probably filled out a piece of paper, had your bid, the property number, and you probably sent it off. and this is saving with a check. So what they'll do is sometimes they'll require the full amount of your bid to be mailed with it, and then they'll send it back if it's not accepted, or they maybe do a deposit or something like that. But it is used to be a lot more common with the internet and stuff like that. Nowadays, it's not so much common. But in some rural areas, it's still it happens from time to time. And it's tough when you do a sealed bid auction too, because you don't know what the results. You don't know when how many properties you're going to win, what you're going to pay for them, all that kind of good stuff. So you're kind of just putting it out there and hoping for the best, right? You don't want to overspend, you don't want to underspend and not get any properties. So it's tough. Sealed bid auctions are tough, but yeah, they do happen. It's legit. Let's see. I've got. What if you're not looking? Okay, what if you're not looking to invest in homes but want to buy your first residential home by auction? Is this a margin or huge risk? Do you have any tips? Yeah, absolutely. You can definitely do it. A few things though. Number one, the property has been tax foreclosed, which means that the property, obviously the owners did not pay the taxes, which means they probably didn't maintain it as well. So be prepared. If you buy a house, you're gonna have to put some money into it, especially if the one you're gonna live in. You're gonna have to put some money into it to remodel it, to get it up to your standards, up to probably livable standards, and maybe even up to the building department standards, that kind of stuff. That definitely can cost some money. As far as what else is there? Number two, you don't know exactly what properties will be offered. So it might be in a bad area, it might be in a good area. I don't know. It just kind of depends on, it's kind of luck of the draw. You can, if you happen to stumble across a piece of property that you're capable and willing to invest the money into to make it where how you want, and it's in a location that you want, it can absolutely be a great way to buy a house. And I've actually seen a lot of people over the years attend these auctions to buy a house, and they're so excited because they get incredible deals, and it's a great way to do it. But I want you to make sure that you do your same research as if you were an investor as well. Go through all my videos and that kind of stuff too, because it's going to help you out a lot. That's not just investor stuff. It's for anybody buying these properties. Even if you're buying one property in your lifetime because you want to live there, this is going to be a great way to get a good deal. But there's a lot of stuff, a lot of due diligence and that kind of stuff. There is definitely a risk, but it can be an awesome way to do it for sure. But again, you're kind of at the mercy of the properties that are actually offered at that auction. Could be good, could be bad. Might be 5 years before you find one that would be suitable for you. So in the meantime, you might want to look other places as well. So let's see. Mr. Jeff Trader, are certification services specific to the initial buyer? In other words, if the buyer were to sell, would they need to purchase another certification, or does the original certification persist? Great question. So if the tax title services, on theirs, what they do is they actually require an addendum go along with the contract when you sell it. That addendum basically says that this piece of property was purchased at a tax foreclosure. This piece of property went through the tax foreclosure certification, and this property is getting insurance because of tax title services and their relationship with whatever title agency, First American, Stewart, whoever it is. And then it says for a period, I believe it's up to 4 years, 5 years or so. If you want title insurance, you can get it basically through that same company. You don't have to go through the certification process or anything like that. They just have to know about it, and that way they can certify it to the new title insurance, to the new closing company, and that kind of stuff. So they can definitely be reused for up to a period of 4 or 5 years, and then after that, the property is perfectly fine. It's good. So hopefully that answered your question. That's kind of a long-winded answer, but hopefully that got it. What are your views on Rocket Lawyer? Good site, yeah, the good stuff. As far as using the real estate specific stuff, what I always like to do is, if you want to use it, great. That's a good way to get contracts and stuff like that. But for like deeds and for deeds specifically, because I know you mentioned that you might want to consider buying it and then comparing it to maybe other recorded deeds that you find in that particular state, just to see if the language is the same. Because every state's just a little bit different. I've had states literally reject my deeds before because the paper that they were printed on was too thin, which I thought it was like normal paper, right? Other times you have like margin requirements. They have to have a certain amount of margin. That way you can figure out, that they can put the stamp there that says it's been recorded, all that good stuff. They can stamp it with their seal, all that good stuff. So like they can only be so high. The margins have to be like, every state's just a little bit different. Every county's a little bit different. So if you get something off something like Rocket Lawyer or LegalZoom or somewhere, make sure make sure it's applicable to that one state and it's not just a generic contract or generic quitclaim deed. Hopefully that answered you. I've got, let's see. Nikki says, is there a percent of tax value that you should bid? I think she's basically saying when you go to the auction, is there a percentage of the tax assessment you should bid? The answer is no, never. And it seems like an easy way to do it. If the property is valued at 100 and you get it for 30% every single time, $30,000, great deal, right? It seems like an easy way to do it. But counties assess their properties differently, and it really depends on the specific assessor that goes out there. It might be 50% of true market value is what the tax value is assessed off of. It might be much, much higher, right? They might have not adjusted in the past few years. Or one that I see a lot, not a lot, but one that happens from time to time, is maybe they assessed that property. The tax assessment was back when a mansion was built on it 2 years ago, but it's since burned down. The guy stopped paying the taxes, and you're buying off that tax assessed value, a percentage of it. So never buy off that. Do your own research, do your own values. Figure out the value for yourself. The tax assessment, the property assessor's information is a wealth. It's a treasure trove of information. However, don't go off their values when it comes to placing your bids and stuff like that. You can use them for looking at like sales histories in the area and that kind of thing. Look at the legal, if it's linked up and everything, that'll be very, very helpful for you. But don't use their actual tax assessed value to place your bids. I hope that helped you, Nikki. Let's see, Dr. said, if I'm buying online in state across the country, how would you recommend doing proper due diligence without involving a realtor to avoid commissions, obviously? As far as pre-purchase type stuff, there's so much you can do online, especially if they have an active GIS, property assessors. If they're up to date and they're up to date as far as technology goes, you can do so much stuff online. Now, I always recommend still getting some sort of eyes on it and hopefully somebody you trust. If it's a pre-purchase type deal, you can find scouts off of Craigslist. I've got, I think, some videos on that, maybe on YouTube. I know I got some in the academy. You could even hire realtors, especially green realtors, new realtors, and say, listen, here's $50, here's gas money, here's $100. When you're in this area, drive by the property, take a few photos of it, that kind of stuff. That'll help you like pre-purchase. After purchase, there's so many ways to sell stuff for sale by owner, FSBO. There's so many FSBO type websites. You can even throw stuff on Zillow now as a FSBO. So it's very, very beneficial now utilizing technology. It's really going to be easy to sell it. And then obviously, if you want to save that commission, you can do it yourself. But just realize that if the property's higher in value, it might just be easier to pay that commission. If you're talking a $4,000 or $5,000 property and they want $1,000 for commission, save your money. If you're talking a $30,000, $40,000, $50,000, $60,000 property and it's going to cost you $2,000 in commission, it might not be that bad of a deal at the end of the day. So there's definitely ways around it, utilizing the internet and technology to do it both pre and post purchase. Hopefully I answered your question, Jeff. I'm sorry, that was Dodger. Let's see. Mr. Jeff Travers right below that. It sounds like you often opt for quitclaim deeds when selling for special or limited warranty deeds for properties without quiet title. Is that to limit liability? Absolutely. Yes. 100%. I really don't have any room for expansion on that, but that's definitely to limit liability. If I don't quiet that title, if I'm not issuing title insurance, I am not going to get any sort of warranty deed. I'm not going to even provide a limited warranty. It's going to be a straight quitclaim deed. And the reason is, if that, maybe that buyer accepts it, but maybe when they sell it to somebody, they go back and they start suing everybody in the chain. I don't want to be named on a lawsuit, so quitclaim deed is going to be the easiest way to limit my liability if there's not title insurance involved. Let's see here. Jordan Lipscomb says, how do I get a delinquent tax list? I'm assuming you're referring to a delinquent, maybe a tax lien or tax deed list. If it's just a delinquent tax list, you can probably call the tax collector, I guess. Maybe you want to contact them or something. As far as tax lien list, tax deed list, go to the county, whoever handles it, the county department that handles tax foreclosures in your county, and they'll give you one, call them, go to their website. A lot of them are posted online now. Super easy to get a hold of them nowadays. The Virginia farmer, do you ever sell timber off the properties you buy? I have actually never done that. And truthfully, I don't know of any of my students or anybody that that's gone through my county that has. I know people that do it on the private side, on the private setting. That's kind of their business that they go and they log stuff and then they replant all that good stuff. That's a business that I am not familiar with, though. I'm sorry, I couldn't help you more with that one. I've got about 2 more questions on the questions I received ahead of time, guys. So if you have any more questions, go ahead and pop them into the box for me. Let's see, I've got Dave Goes Keto 2. If I buy a property, will the taxes be up to date, or do I have to go back and pay back taxes too? You don't have to pay like back taxes, no, because they're all wrapped up in the opening bid amount, or if it's a scavenger sale or a second round or something like that, those are already extinguished. But in just about all states, if you buy a piece of property at a tax deed auction, you're going to be responsible for paying the year's taxes in which you purchased that property. So basically, if you buy a piece of property today, you're going to be responsible for the past 11 months worth of taxes, and of course this month as well. It can be a chunk of change in certain cities and municipalities that have crazy high tax rates. It could be a few $1,000s that you weren't counting on. So just factor that in. You don't have to pay the back taxes, anything else. It might even be a good idea to buy properties in January. That way you only pay in January if you sell it in February or something like that. So yeah, you usually pay the taxes that you buy in the year in which you buy the property in, but nothing prior to that point. Let's see. Mr. Jeff Trader, how often have you lost a property after acquiring a tax deed? I would say, I don't know the exact number. I can count on one hand. After probably 1,100 or so, I've counted on one. Well, if you're talking about redeemed that's a different story. As far as like actually losing a property because of error or because of an issue when it came to the issuing the deed, or something that the county screwed up on, probably 5 out of 1,100. So when it comes to like redeemed properties, as far as, I don't really consider like losing those. It depends on the state and that kind of stuff. Different states are different percentages. Like in Texas, it's rare properties get redeemed too often because the penalty is so crazy out there. But in other states, they do get redeemed. But yeah, as far as actually losing one after acquiring it via tax deed, for technical issues, that kind of stuff, mistakes, it's a phone call that the county does not like to make, and I don't like to receive. But usually it also happens very, very, very quickly after the auction, maybe a week or so. I think it's the longest I've ever had. And they always call me, hey, we made a mistake. But it happens very, very rarely, but it does happen. I think that's about all the questions. I've got one more pre-record. I've got Jesse. What's the cost of a tax certification? So you can go to taxtitleservices.com, I think is their website. And you can also go to, if you're in Florida, I think Clear to Sell. There may be one new one I'm not positive of yet. Depends on the state and stuff. It's usually like $2,000, $2,700, $2,800, somewhere in that ballpark. Just kind of depends on the state and and the service you use. I think Clear to Sell is a little more expensive right now. Guys, I think that is all the questions that I've got. Let's see if I missed anybody's questions. Just circling back through them real quick. I think I've got everybody's questions. Oh yeah, guys, let me go ahead and let's see. Okay, with buying my first home from an auction, do you have any more tips? Just be patient. Understand what you're getting into. Know that property is probably going to have issues, and it's not just going to be carpet and paint and stuff like that. It's going to be serious issues. Most of the time, it's going to be like a roof, maybe some frozen pipes, depending on where you're located. Maybe foundation issues even. Some of these properties are tax defaulted for a reason, meaning that the owner, the person that lived there, did not feel that property was even worth paying the taxes for. Now, I'm not saying all of them are like that. The large majority are not like that, but just understand that there can be some issues, in these properties, which is the reason they're auctioned. So, understand that, and obviously be patient. That's one of the biggest things. Don't just go out there and buy a piece of property because you think you should buy it at the auction and you think you're going to get a deal. Don't force yourself to do anything, because that's when you put yourself in bad situations. You waste money that you shouldn't have been wasting, that kind of stuff. So be patient, sit back, wait for the right opportunity, and just in the meantime, get ready, go through all my videos and learn everything you can about your local market. That's something else that I really suggest to you guys. Browse around Zillow, Trulia, Realtor, drive around the neighborhoods with your app out, just learning what stuff is selling for around you, learning what the market's going up, going down, what's going where, that kind of stuff, because that's one of the best ways to really be a well-rounded investor. Eventually you should be able to look at a tax sale list and say, yep, this piece of property will sell for about this much. This piece of property will sell for about this much. And it makes it very, very easy and it allows you to be very efficient. That way you aren't valuing every single piece of property as you go to that list, but just familiarize yourself with the market that you're investing in. See a few more questions pop up real quick. Let's see. Yoshik, how often will you do these Q&As? They're really helpful to us all. Yeah, I love doing this interaction with you guys, for sure. I'm gonna try to do them once a month. And what I'll do is, if you check my channel frequently, I think I can post it on the channel, and it'll probably about a week in advance. It'll be up there on my main channel page, and you can hit that reminder button. I'm gonna definitely do them at least once a month. In the meantime, if you have any questions, always feel free to ask the question down below the video. I check my videos every single day if I'm in town, which is a lot lately. It might be, I might not be able to respond quite as quickly around the holidays. I'm leaving town for a little bit, but if you have any questions, put them down below the video. Otherwise, yeah, same for the Q&A. I'm doing them at least once a month. Career real estate investments. Do you ever try to purchase property before it goes tax foreclosure directly from the current owner? Yeah, we actually had this question earlier. I do sometimes. It can be a challenge because you're dealing with an owner that has, that is losing their property. They might not want to deal with you. They might hate the world because, they might think you're the rich investor guy that's kicking them out of the property because they don't understand the process, that kind of stuff. And you also have to consider that all the liens, all the encumbrances will still be there. They'll still be existing. Another thing too is you don't want to go like the day before the auction and try to sneak in there and buy that property, because you need to make sure there's time to get a title search done and title insurance, because the last thing you want to do is try to sneak in there at the last minute, buy a piece of property that has a horrible title, has all sorts of liens and encumbrances. Was going to cost you a lot more money than if you would just waited at the auction. So yeah, hopefully that answered your question. And then Mr. Jeff Trey, what is the best way to research restrictions, covenants on lots in raw land? This can be difficult depending on where exactly you're at. In some areas, they're listed on the county's website. You can actually go in there and you can find the history. You can maybe search the official records for, the Meadow Glen subdivision, and they'll be recorded inside the official records, and you can actually go through them that way. In other areas, what I suggest some people doing is, if you're truly interested in that area and you're, and you maybe need a realtor in that area, find a listing in that subdivision that's listed and call a realtor. Say, listen, I'm thinking about investing in this area. I'm interested in this property, whatever it is. Do you have any information on the covenants, on the deed restrictions, that kind of stuff? And if that doesn't work, you can call the county, see if they'll help you. And if you hit all dead ends, you can always get them from a title company. They might or might not charge you. If you have a relationship with that title company, call that closing agent and say, listen, can you get me the restrictions for this area, for this subdivision? And they will definitely give them to you, because all they have to do is log in and pull them. They might charge you a small amount otherwise. But it can be difficult just depending on the area that you're investing in. I think that's about it, guys. Career, yeah, absolutely, guys. Dodger, you are so welcome, guys. Again, I really, really enjoy this interaction with you guys. And like I said, I'm gonna do these once a month at the very least. And in the meantime, if you have any questions, leave your comments, leave your questions down below the videos. And then, of course, guys, if you want more additional training, more detailed training, Tax Sale Playbook is a great way to start. Great resource. Kind of bundles everything that I have on the YouTube channel. Puts in a kind of sequential order that you can apply it to your business. Then, of course, taxsalepodcast.com. You can take us on the go, listen to us, put an episode out there every single week. And then if you want more detailed training, go ahead and join Tax Sale Academy at taxsaleacademy.com. And then Pac-Man got the last question here. How do you get your first rental property through tax deed auction? You be patient, you wait for that property to pop up. And just like I was telling somebody a few minutes ago who's looking at buying a house for themselves at a tax deed auction, be patient, wait for the right property to pop up. Understand that they're going to have lots of issues, probably a lot more issues than a bank-owned property even, perhaps. Just because they might have been sitting vacant for the past few years and a bank has not even been taking care of them. So understand that getting into, know what you're getting yourself into. In the meantime, do your due diligence, wait for the right opportunity to come along. And then, of course, you're kind of at the mercy of the property selection. So wait for that right property. And then when you see that property pop up, attack it. All right. And I think that is it, guys. That was the last question. And yeah, guys, I will see you next month. And again, that's all I got for you. Have a wonderful holiday, guys. Appreciate you guys coming on tonight, and take care, folks. Bye-bye.